to each other. But now we all use email. So in the same way, Bitcoin is also a protocol, right? And it is a software that we're all deciding to use to transfer value to each other over the internet. And I do believe that Bitcoin is the dominant protocol for that value transfer. You're aware that hundreds or thousands of other cryptocurrencies exist, but none of them mimic this universally agreed upon protocol like email.
That was actually my next question of you were talking about gold and its scarcity. There are other precious metals that are in many regards more scarce than gold, but they're not really viewed as a store of value. So I guess I was just going to ask why gold was like valued over some of those other metals, just like why, I mean, I guess you just answered it, but why Bitcoin would be valued over other cryptos.
Yeah,
Um,
it really comes down to, in my opinion, this idea of energy and mining in Bitcoin. The computational energy that currently is dedicated to the Bitcoin network, and it's growing all the time. It's so great. It's such a is such large magnitude that Bitcoin runs in a way that nobody can co-opt it. Nobody can take control because it would just take too much computing power. I like to say that you would need a server farm the size of Brazil to try to take over the Bitcoin network and manipulate it to your benefit. And for that reason, Bitcoin is secure against attack because of all the mining computational energy that's dedicated to the network. And so Bitcoin is truly decentralized. There is no company called Bitcoin. There is nobody you can subpoena. There is no server farm that you could nuclear bomb and bring down the network. It is that decentralized. And no other cryptocurrency even remotely resembles that type of decentralization. You at least have a person, a company, a foundation, or a server farm that is maintaining, all of these other networks. I also like to say that Bitcoin was this immaculate conception where you didn't have anybody with their eyes on Bitcoin at the beginning. Now, any currency that tries to start up is going to have a center or some sort of authority involved or governing body to issue the process with a billion eyes on the industry of crypto. And so there are a few reasons here, Alex, but I think the energy that makes Bitcoin decentralized is the reason why Bitcoin is the dominant value settlement layer in the digital realm.
that's good to know. uh,
For you kind of mentioned like and you mentioned your book a little bit like commodity versus currency. Could you
Yeah.
explain to the audience maybe a little bit in that difference?
Yes. So a commodity is a thing, right? Certain examples of commodities are gold and silver, cattle and pork bellies, orange juice, copper. And so these are all things that are produced and are used in trade, but gold is the only one of those commodities that is kind of just put in a vault. There are other precious metals as well, but palladium, platinum, and silver are used in industrial cases a lot. Gold is used in industrial cases, but the vast majority of gold is just put in a vault. And so we look at different commodities and we try to figure out why they exist. Well, we know why oil exists. That's the most obvious one. We need oil for the planet to run, and especially today, we're still trapped in a petro energy sort of system. But why do we keep this shiny rock in a vault, gold? And the answer is based in history. I do try to dive into this in Layered Money, but it's because gold is thought of as the one of the ultimate stores of value where people can trust in every corner of the planet that this rock will have value 100 years from now. You can't say that with a barrel of oil. You definitely can't say it with live cattle. You can't even say it with palladium because we don't know what car companies are going to be using for their engine parts. But you can pretty damn well be sure that gold is going to keep that value 100 years from now. Um, and it's because we have ancient Egypt and ancient Rome and the founding of the United States and the Spanish conquest of uh, Mexico and Central and South America to prove to us that the human race needs gold. And the fact that gold still has a price that is near its all-time high in dollar terms, at the very least, tells us that. And Bitcoin is really starting to mimic this idea that it's always going to have monetary property. And so for that reason, Bitcoin is a commodity. But it also resembles a currency in that you can send it to each other. You can use it as a unit, similar to gold coins, where gold coins are both a commodity but also a currency. We have several hundred years of history, actually thousands of years of history in which that is the case, where gold is both a commodity and a currency. And Bitcoin is both a commodity and a currency. It's a commodity first. I think that's the digital gold argument and essential to understand. It has currency-like properties, and because it's a software, it's being upgraded all the time by the decentralized network of software developers around the world that are working on Bitcoin, and they're making Bitcoin more usable as a currency so that I can send it to you really fast, quick, easy, cheap, or free. Um, and so that's a very exciting aspect of Bitcoin. I know you guys might want to touch on the Lightning Network, but that is what Lightning Network is. It's this upgrade to Bitcoin where we can use it. We can use it way quicker than just regular Bitcoin. It speeds up the use of Bitcoin and makes it really a lot more like a currency. So a currency is generally thought of as a money that we use in exchange. It flows like a current, right? That's where the word comes from. And so governments have taken control of the issuance of currencies for the last 400 years, right? At the very minimum. The governments before that were using the gold commodity itself and actually minting that into a currency. But for the last 400 years, we've had government invent currencies or use their own paper or creditworthiness as currency. And that's what the dollar is today. It is an instrument issued by combination of the US government and the US Federal Reserve Central Bank to facilitate economic activity in the United States. That's what it was created for, but now it's used in commerce all over the world. And so the currencies and commodities are very different from each other. Bitcoin completely blurs this line between the two in a very interesting and fascinating way, and it's going to be a big part of what my work is going forward. So not to give you a cop-out answer, but a lot of my future research is going to be focused around explaining the difference between a commodity and a currency and where Bitcoin falls in this modern era in which the dollar is changing in um, in the way that it's perceived, with the introduction of Bitcoin. So it's fascinating stuff. It's a great question, and there's a lot to unpack there for sure.
I guess real quick, going back to sort of some of the gold, some I guess what I've always heard is that the reason gold, one of the reasons that gold is viewed as a, sort of a store of value, is that it has an end user. Someone at the end always wants to use gold, primarily the jeweler, or like a jeweler, or I mean, in today's terms, it can be used in medicine or fillings, or I mean, I actually use it quite often in chemistry lab. But it's like there is a physical, tangible unit that you can use. I guess how would you respond sort of to like Bitcoin is only, I mean, I guess you've sort of just touched on that and how it's also a commodity, but you can't really, in a physical sense, use Bitcoin.
Yeah, I would take the other side of that. And I would say that I don't believe that gold has value because it has an ultimate end use in chemistry applications or technology applications or dental applications or all these things that we do use gold for. It is used, and it is an incredible chemical, in a lot of these applications. That's why, space exploration needs gold. It's one of those metals that you can't get that type of property set with other things. However, I believe that gold's value historically has been that it is the consensus final settlement money that you
Okay.
can it has value because you can transfer it across generations,
So,
and
so
it
almost,
and it won't tarnish, and it won't.
sure.
Yeah, and so it is the end user, but it's for money. It's for
Okay.
keeping it, and so that's why I believe gold has value, not the applications. But going forward, let's say 20 years down the line, if Bitcoin has completely changed people's thought process about the ultimate form of value storage on this planet, and Bitcoin begins to replace gold, then gold might revert to a price in which is only supported by the industrial components, and we'll get to see in that scenario what what the value of gold is absent the monetary use case. But that's something that I can only speculate, and I don't like to make predictions that Bitcoin will take over gold in this many years, or surpass the dollar in its use in this many years. That's a fool's errand. I think that we can look at internet adoption and potentially apply that sort of adoption curve to Bitcoin, and think that in 10 years, we might have billions of people using Bitcoin in some way, shape, or form. Not that Bitcoin will be the only currency on the planet. That's not what I'm saying. Just how many users. And so we have billions of internet users. I believe we'll have billions of Bitcoin users. What that means for the value, or what it means for gold, or what it means for the current monetary system as it stands, is all pure speculation, and something that is so many years down the road that it's almost useless to try to guess what's going to happen. Let's look at the next few years and try to guess what's going to happen. That's what I try to do with layered money, where I look about 3 to 5 years in the future with the introduction of central bank digital currencies, and what that means for Bitcoin and the growth path that Bitcoin is currently on.
So you just touched on central bank digital currencies. Could you maybe go into how that fits in, and maybe just explain what that is?
Yeah, so central banks currently issue two types of money. Let's just focus on the Fed for a second in the US. The Fed issues two types of money on its balance sheet. It issues reserves, which are deposits for banks only. It's the bank keeping their money at the Fed. Those are called reserves. And cash, Federal Reserve notes, the paper dollars that you and I have in our pocket at the moment. So those are the only two types of money that the Fed issues. The money that people have dominantly today are checking account dollars. those are issued by commercial banks. Though those have an added layer of counterparty risk in the financial system. I discussed some of that in layered money. The deposits are a third layer money as opposed to a central bank money. If you had just $100 bills as your only form of money, you would have second layer money because it's issued by the Fed. So the Fed issues two types of money, but in the future, they want to issue a digital type of money that people can use. So the digital version of cash. But if they introduce digital cash and let's say either take away Federal Reserve notes or it functions side by side, the Fed would then be issuing three types of money: reserves to banks, cash, and Fed coins, as they're now being called in the media. So if the Fed issues Fed coins, how does that really change anything about Bitcoin? It doesn't. It just means that people might be using Fed coin instead of cash, and they might be using Fed coin instead of their checking accounts. So I think that central bank digital currencies have enormous implication for the commercial banking sector, because if you work for the government in the future and you get your paycheck in Fed coins and you can go to the grocery store and spend those Fed coins to buy groceries, why will you ever need a checking account again unless you need to borrow money? And so it again, central bank digital currencies shake up commercial banking and this idea that we need a banking system to have a money system. And it maybe throws commercial banks into a tizzy as they have to fight to survive in this new era with central bank digital currencies. But let me bring it back to Bitcoin. What did I say about the decentralized nature of Bitcoin and this idea that a server farm doesn't exist that you can nuke and bring it down? Bitcoin exists and has value because it is independent of governments, central banks, and the current monetary system. It comes into existence by computational energy. It's a virtual commodity. That's what the CFTC calls it. That's our Commodities and Futures Trading Commission here in the US, regulatory body. They call it a virtual commodity. And so Bitcoin is this non-government neutral currency, neutral virtual commodity that people want to buy because it's not associated with any of that stuff. So I don't think that central bank digital currencies take anything away from the use case of Bitcoin. Bitcoin is not valued because it's digital and people can send it on the internet. Trust me, we have Venmo for that. We have PayPal for that. We have lots of other technologies that we can transfer money to each other. Bitcoin has value because it's neutral money and it's not associated with any government. And so going forward, I hope that the readers of Layered Money understand that central bank digital currencies actually accelerate the adoption of Bitcoin as we embrace digital currency, and people can more easily go between government currencies and non-government currencies in the future. And that is assuming that central bank digital currencies, at least some of them, will have a freedom to use them, meaning they won't be, restricted and it's in the exchange of this to that. But that might be naive of me. But I feel that we'll have at least a few countries that will take the freedom route, as we will have countries that take a very restricted approach to how their central bank digital currencies can be used. And then the last point on CBDCs is that I believe it accelerates the idea of universal basic income, or changes the way that benefits are given to the people in the United States and other countries around the world. Fiscal policy is needed to give stimulus checks to Americans today. That means a Congress has to pass it. Well, if FedCoin exists in the future, the Fed can just send money to everyone's wallet. And so can that happen tomorrow without legislation or without Congress giving their opinion or passing a law? No. Congress will need to govern this introduction of a new central bank money by the Fed and maybe expand their mandate. So again, that's the stuff that I'd like to speculate on, in the next few years, and what I'll be writing about and researching about is what is going to happen with Fed coin. How are they going to um, interact with the banking sector, and the freedom by which you can just exchange Bitcoin for Fed coins, and that's the exciting stuff. How the Fed is going to propose Fed coin to the Congress, that's exciting stuff. I'm hoping to be involved in that conversation as certain politicians in DC are reading Layered Money. And so that's very exciting to me. And I hope to be able to um, provide some insight into what I think the interaction between central bank digital currencies, the banking sector, and Bitcoin will be in the future. It's highly complex, and something that central bankers and now to some degree politicians are getting involved with. The ECB, the Reserve Bank of Australia, Bank of Canada, Bank of England, and now the Fed, and of course the People's Bank of China are all heavily involved in CBDCs and are either about to issue one or launching their entire beta phase of this new technology.
Yeah, so going back to this is just sort of, I guess, a tangent, but going back to the banks, uh, I don't know. So would you expect that? I mean, if the Fed with the Fed coin can just send out money and people are then just using Fed coins, would you sort of expect the banking sector to almost go under, or would you? And then also conversely, like would you expect like the lay American to almost, I guess, be applying for loans from the Federal Reserve
Yeah,
instead of?
that last point is a great thought experiment, because uh, the answer to the first part of your question is that we still need banks to issue loans. And
Right.
so you'll have your JP Morgan coin that um, will be your loan or your mortgage, right? You'll have to use the JPM coin to buy your house. You won't be able to use Fed coin to buy your house. So we still will need banks to lend money. But is the Fed going to become the sole lending apparatus and just send banks down? Uh, I doubt it. I really doubt it. I don't think the Fed is in the business of trying to put banks under. And so when I read, the Fed is a little bit behind the ECB, Alex. So I'm going to use the ECB here.
Right.
The European Central Bank wrote a paper last year that said we are very concerned about the digital euro because of the implications on commercial banks, and we don't want to send them under. We don't want them to cease to exist. We don't want to replace deposit banking. And so I believe that's going to be the case also in the US. In China, they've actually flirted with this idea that the digital renminbi will be the only currency used, and that commercial banking deposits will go away entirely. I'm not saying that is going to happen or that it's my prediction, but they have thought about that. And I could see that happening in a country like China, where they can make a unilateral decision like that. But the banking lobby is not going to just let FedCoin
Right.
replace
Yeah.
everything. And so we are still a credit money system. We need credit to make the economy go. And the issuance of credit is done by banks. In the West and abroad. That's how our money system works. And so I don't think FedCoin just sends banks under, and I think that the Fed is going to be very sensitive on how they roll out and the implications on banks. With that being said, banks are in trouble because they historically have relied on deposits for funding. um, that model has gone away mostly these days at the largest banks, where they use wholesale funding now. They don't use deposit retail funding to make their balance sheet go. They use wholesale funding, which is borrowing in the short-term interest rate market or pledging treasuries as collateral to borrow funds to make their bank tick tock. So with retail deposit banking going away even more in the future, it really shakes up maybe small and medium-sized banks. It shakes up banks in other countries that don't use wholesale funding. They don't have US treasuries on their balance sheet, so they can't do this type of wholesale funding to operate. So you're bringing up a lot of great questions that we're just going to have to wait and see how it unfolds. But I'll be reading the Fed papers and see what direction that they might be going.
I guess with the adoption or your hopeful adoption of Bitcoin, who would you say are like the biggest winners and losers?
The biggest winners are the people, because the people of the world have access to Bitcoin. So, if you have the smallest amount of Bitcoin being purchased in different parts of the world, and Bitcoin continues to gain market value and adoption, it's a wealth transfer, right? You're actually building wealth in these small pockets of the world that would have never otherwise had that opportunity because they don't have stock markets and access to you know sophisticated financial instruments or ETFs or different investment strategies. Billions of people around the world, Bitcoin is the first time they've been able to access a global investment. So to me, the winners are the people. The losers are those who rely on government monopoly over money. So at the margin, governments are the losers here, because they have a marginally less ability to tax and to capture the digital economy. And so I don't think that Bitcoin makes governments go away anytime in the near future, but Bitcoin does alter how governments are going to think about their own currencies and their power to tax, which is what keeps the lights on. And so it also potentially affects their ability to issue debt and sustain that market. So we know that the government of the United States is issuing trillions of dollars of debt, but the bill is being picked up by the Fed, who's buying trillions of dollars worth of treasuries. And so that equation, maybe comes into question as people lose confidence in that situation. So at the margin, I do believe governments are the losers here, but they don't all have to be losers. The US has the most to lose because it has the world reserve currency, and it also has a currency that's used for uh, no reason other than it's the consensus best instrument to use across the world. And so, when Brazil and Mexico are trading with each other and using dollars, in the future, if they use something other than dollars, like Bitcoin, the dollar system itself is stands to lose from that. But a small government in Africa or Latin America or Asia that decides to buy Bitcoin or to pass incredibly Bitcoin friendly tax legislation, or is a full embrace of Bitcoin in a regulatory environment. They're going to bring business to their country. They might benefit greatly from the adoption of Bitcoin. Not saying they're going to peg their currency to Bitcoin, but just allowing Bitcoin to flow into that country. If Bitcoin's value goes up in the future, they can gain. So that would be the winners and losers there for me.
Yeah, I guess I would agree with that analysis. And then my next question would be like, what do you think would happen if, I guess just since we're on the U.S., if the U.S. decided to ban Bitcoin, would that even be I mean, would that be technologically feasible, or I guess what would your, prediction for something like that be?
Yeah, I think at this point you can't ban Bitcoin because it's just keeping your computer on and you can't shut all the computers down. You can criminalize the ownership of it. You can also criminalize the usage of it. And I think that we are so far past that in the United States. The IRS, the CFTC, the SEC um, have all, and the Treasury Department have all at least acknowledge that Bitcoin is here to stay and exists, and it really is being embraced as a technology by the West, even though it does at the margin threaten central banks and governments with the ability to tax. Governments aren't coming out, at least the United States, they're not coming out and said, we're scared of Bitcoin. We don't think that it should exist. You have some politicians that have made certain comments over the last few years, but it's not the consensus. It's far from it. And as you know, in the United States, regulation happens slow and across administrations and across party lines. And now we've had basically since 2014, when the IRS said that Bitcoin is a digital property and will be taxed in a capital gains way, just as gold or other real estate is taxed in that same property vein. Ever since then, for the last 7 years, it's just a slow adoption and introduction of certain regulations to make sure that Bitcoin can function here in the US. And then, let's just take Coinbase, for example, Alex. Coinbase just went IPO, one of the largest IPOs ever in the world. And so the US is uh, embracing Bitcoin as a technology. It's here to stay. It's not going to be banned. It's definitely not going to be criminalized either in the United States. I think that we're just really far past that. If certain smaller governments like Turkey just made an announcement that they might try to criminalize the usage or ownership of Bitcoin, there look at the currency. It's going to collapse. Is your currency? You're just lighting your currency on fire. And so, with in this era of jurisdictional arbitrage, regulatory arbitrage, Bitcoin companies are just going to go to places that say it's okay. It's a computer software, guys. So you can't ban it. You can't make people turn their computers off. It's just like BitTorrent. People will always be sharing files with each other illegally and across the world. You'll never be able to ban that, and so people will be always able to send Bitcoin to each other peer to peer. And I I I don't think that the United States is going to make some grave mistake and introduce any sort of criminalization of Bitcoin. And I hope that they don't levy an excess capital gains tax on Bitcoin, which would be, I think, misguided, but something that certain governments might try in a, you know, oppressive tax regime uh, sort of way. Not necessarily the U.S., but maybe US or other places. So I hope that governments won't do that type of thing. But in terms of banning, that might be the first thing that we'll see is that sort of, 90% capital gains tax on all Bitcoin profits.
How do you think that would play out? Do you think people would just hold if they said capital gains
Pe-
skyrocket?
people
I mean,
Yeah.
people always find a way to evade taxes, and now with hedging instruments, and a really uh, robust hedging environment in Bitcoin, that it's not it's not in the same league as oil yet, or stocks or bonds, but people can hedge their portfolio for tax purposes or move the holdings to Grand Cayman, or figure it out. So people always find a way around taxes, and so that's why I don't think that the U.S. government is going to make a silly mistake and send business away, especially with the Coinbase IPO. I mean, if the government, if the U.S. government loves one thing, it's corporations. And so, with Fidelity, Bank of New York Mellon, all these companies in the United States that are going, all in on Bitcoin. Um, from a business line perspective, right? Not buying it, but just betting hundreds of millions of dollars in research and development and new product lines dedicated to Bitcoin, the U.S. government's not going to come in with the hammer. That ship has sailed.
I guess so. So you've kind of, I've heard you on a couple other podcasts talk about the volatility, and that's kind of the one thing that is a concern for some investors. When someone, let's just say someone with like under $1 million net worth comes to you and asks, how much exposure should I have to Bitcoin? How do you kind of think about answering that?
Yeah, that's that type of question I never answer.
Okay.
Yeah, I definitely never answer how much percentage of the portfolio you should put in Bitcoin, but I basically, say a few things. Number one, it should be a minimum 5-year holding period if you're going to buy this thing. And number two, which is associated, don't you dare trade it. Don't you dare trade it. I also don't recommend people to diversify their crypto exposure because that's too much risk. And I haven't done any research on any of those coins, and none of them have shown an extended track record versus Bitcoin. Yeah, they might have higher dollar prices today than they did 3 years ago, but that doesn't really matter. No single currency other than no single cryptocurrency has been able to sustain outperformance in Bitcoin, and there's just too much risk there. There's centralization risk that's not why I got into Bitcoin, right? I think Bitcoin has value because it's neutral and you can't bring it down. If any other currency could say that, I would have to do an analysis there, but I don't. So I don't recommend any diversification. So those are the first few things I say. But then you got to warn about the volatility that Bitcoin exhibits 75% drawdowns and 5,000% increases with regularity. It's also only 12 years old. So we only have a certain time series of price data to analyze and to make projections going forward. And so we've had 3 bubbles, huge bubbles, price bubbles, 3 80% crashes, and each time a few years later, about approximately 3 years later, a new all-time high. So one thing I say is be aware of the cycle within Bitcoin. You might come in and buy the $60,000 price that we had 3 months ago, and you might have to wait a year or years to get that level back. But if you hold it for 5 years, my advice to people is that if you hold it for 5 years, that you've historically you've never lost in Bitcoin. And so I think that the adoption path of Bitcoin is such that over the long term we grow, but in the short term, this is an unprecedented type of market. And again, here now we're getting into stuff that is my current and future research. What drives the price? What makes it so volatile? And how can we make sense of the volatility and marry that with the fact that this is a technology that is absolutely here to stay and going into the multi-trillions? So how do you have something that's going to rival gold but have the volatility of Bitcoin, meaning that it can go from 60,000 or it could go from $1 million to $400,000 in 3 weeks? And that might happen 5 years from now or 1 year from now. I don't know. And it could also go from 30,000 to 300,000 in the next 6 months very easily. So how do you deal with that as a lay investor, as a traditional investor that has grown up thinking that, not even thinking, but grown up studying standard deviation of returns and what is your maximum allowable range of returns? Well, Bitcoin, it throws all of that out the window. And there is a new market science developing in Bitcoin with these on-chain analytics, ways that we can actually look at the software itself and pull data out. There's a very famous now Bitcoin analyst. He goes by the name of Plan B. His Twitter handle is at 100 trillion USD, and he has this famous Bitcoin valuation model called stock to flow. And in that model, he has basically looked at the supply of Bitcoin and modeled it against the price and made projections for the future price. And his model has become very popular. One of the things I'm trying to figure out is, why is his model right, and why has it been right? You can't argue that it's been wrong. It's been right. The math is there, but why has it been right? But one of my favorite things about Plan B is something that he said in a podcast. He goes, if you give me 1 month of blocks, meaning just give me the Bitcoin software and for 1 month and not let me look at the data, and you never show me a price, never show me a price for that month, I can tell you what the price is doing. Are we in a bull market or a bear market? And that is, I mean, that is crazy to me, that there is so much data in the software itself that experts can look at it and tell you what's going on with the price. That's way beyond my ability to do. So again, part of my research, what I'm learning, trying to learn about. But your question about volatility, it is dangerous for most. Also, most people are not equipped with the behavioral finance tools to stomach the volatility, which makes it a bad investment for a lot of people, because they'll buy at the top and sell at the bottom. And they'll sell when they feel the most despair, but that's just the end of the bear market and the beginning of the next run. So I went from, in 2016, telling everybody that I could get to listen, that you need to buy Bitcoin, you need to learn about this thing, you need to figure it out, you need to get some. Now I don't tell anybody, because because it's too volatile for most. And it takes education to sit. Jesse Livermore, one of the most famous stock traders of all time, 100 years ago said, I made all my money not by trading, but by being right and sitting tight. And most people can't do that. And most people actually are able to do that in the stock market, because they've been programmed that, over the long term, stocks will hold value and increase. And if you trade, you will you'll miss out on the recovery and the eventual growth of the economy. But people don't have that built in with Bitcoin yet, and so I think that'll take several years, and it'll keep many away. It also scar many. So that's what's happened in the last month. You have investors that are scarred now for life, that will never get back in, because they just lost 50%, or if you were leveraged, you lost everything. So yeah, Bitcoin's volatility is definitely something that people need to be cognizant of.
So do you expect, as the market cap of Bitcoin, I guess, just we've been talking about in terms of gold, like approaches that of gold, do you expect the volatility to go down, or it sounds like, or you expect it to stay the same?
Uh, I expect it to stay the same to the naked eye. So if you run a statistical analysis on Bitcoin's volatility, it is actually coming down
Okay.
on a percentage basis. Okay, that's looking at the last 8 years or so of data. I would recommend everybody here that's really interested in this type of stuff to go follow Plan B, or another on-chain analyst named Willy Woo. Uh, he's got great stuff. So some of this I'm taking from Willy Woo's research, that he's done the analysis. He said the volatility is actually coming down, statistically speaking. But if the price goes from 60K to 30K in 2 weeks, and rips everybody's face off, and the media is going into hysteria, to the naked eye, that's not less volatility. That is the same type of Bitcoin crazy volatility. And so if we do approach gold's market cap and it does go to $500,000 and then it crashes down to $300,000, yeah, that's a 40% decline. Maybe it's less than other 50% declines or 75% declines, but it's still a decline of $250,000 price, and it's going to knock people's socks off. So I do believe it's going to come down. From a statistical standpoint, that might take a really long time for it to meet the naked eye that the volatility is actually coming down. But no, in the next 2 to 3 years, which is the farthest I want to project, in the next 2 to 3 years, you are going to see the same type of volatility in from a dramatic standpoint, right? The headline grabbing, the hair on fire, and also the total wipeouts for newbie traders that are all of that stuff. I fully expect that to continue. I also don't think that it affects the investment case for Bitcoin, because we've had all the volatility thus far. We've also had all the market cap growth. So I don't think that it precludes the value from going up. It will preclude certain people from participating, though.
Right.
And also, here's one more point there. There is no one price of Bitcoin. There's just many exchanges around the world, many currency pairs of Bitcoin. There's also now all these altcoins which do have, hundreds of billions of dollars in cumulative value. And so the price between those coins and Bitcoin is as much a truth as me buying it hand to hand on some peer-to-peer exchange, or buying it on some of the major exchanges like Gemini or Kraken, or any of the futures exchanges that operate abroad like Binance. There are hundreds, if not thousands, of different prices of Bitcoin at any one moment. And that is also a source of volatility, because when one price goes, people don't know whether that's a real movement or that's just one trade that sent that price. And so it takes time for Bitcoin to reach equilibrium when it goes through these huge movements. Nobody knows what the price is. They don't know what the real price is because there's no one exchange. There's no one price. And so for that reason as well, volatility will continue.
I think we're coming about to the end. Al, you got any more questions?
Yeah, I guess could you very quickly go over the Lightning Network again? I was so my general understanding is it allows quicker transactions, correct?
Yeah.
And
Here's a quick way to think about the Lightning Network. Let's say you have Bitcoin and I have Bitcoin. We want to engage in commerce with each other. Okay. Using Bitcoin the regular way, the send and receive way, it's going to be slow and it's going to be costly for us to do that a lot. Bitcoin is meant to be a settlement layer, and especially now that we have the Lightning Network. Now you download a Lightning node on top of your Bitcoin node. I download a Lightning node on top of mine, and we open up this smart contract with each other. It's called a payment channel. Now you and I can basically stream Bitcoin to each other for free without using the Bitcoin network. Because when we open that channel to each other, that smart contract, that is a Bitcoin transaction that hits the network, so that you know it's the truth and I know it's the truth. We can both see this channel on the network. So I don't have to worry that you have that Bitcoin that you said you had and I have the Bitcoin. You don't have to worry that I have the Bitcoin. We've both proven to each other that we have real Bitcoin. And now we can instantly send it to each other frictionless without using what's called the blockchain. Bitcoin's blockchain, which is the mining process. So, that's getting way into the depths of how Bitcoin works. But Lightning Network is basically an app or a wallet that if you have real Bitcoin and you bring it into the Lightning Network and you take that time and spend those couple dollars and it hits the blockchain, now you are in an instantly settling Bitcoin network. So think of it as an app on top of Bitcoin, and the app's use case is instant transfer without having to use the blockchain. And that's what Lightning Network is. Completely revolutionizes the properties of Bitcoin because it brings instant settlement to something that doesn't have instant settlement. And that's very powerful. If you want to take your money out of the Lightning Network, close your channels, you're going to have to do that using the blockchain and take final settlement. But for a month, you can keep all your money in the Lightning Network and transact instantly at extremely low fees for anybody else that's using the Lightning Network. So the adoption is still early, but the technology is there and wildly fascinating and a huge part of the bull case for Bitcoin.
Very cool. Yeah, anything else, or should we head on out?
I think we've been talking for an hour. I think
Yeah.
Nick, we don't need to take up any more of your time.
Yeah, but Nick, maybe if you could just tell people where they can learn more about you and where they can find the book.
Absolutely. So everybody go check out Layered Money. It's on Amazon, Barnes & Noble here in the US, Apple Books. It's on Audible. The audiobook is fantastic, narrated by a gentleman named Guy Swan, who has a great Bitcoin podcast called Bitcoin Audible. He's kind of the official reader of all things Bitcoin. So go check out the book. You can just find it on Google. You can also find it at layeredmoney.com. I have the links to the different websites around the world where it's for sale. And leave a review. Reach out to me on Twitter at timevalueofBTC. That's where I tweet on the daily about Bitcoin and maybe some other things like the fixed income markets. And yeah, thank you guys for having me on. I wish you guys the best on your podcast. And I really appreciate your support.
Thanks. So with that, please reach out to us at brothersonbooks@gmail.com for any book recommendations, or if you would like to be a guest host for a particular book you have in mind. A great review or rating on whichever platform you're listening to this would be greatly appreciated. And lastly, if you can think of any friend, family member, or coworker that might like this episode, please pass it along. And Al, what book are we discussing next time?
The next book we will be doing is Guns, Germs, and Steel by Jared Diamond. So vastly different.
Looking forward
what we just
to
went
it.
over. Yeah, it should be a good one.
With that, bye Nick, bye Al.
Thank you guys. Take care.
Have a good one.